Again, thanks a lot for coming to listen to the Lucara presentation. One of the most important things within our portfolio is obviously the Karowe mine in Botswana, and very different to a lot of the other companies which you'll hear present here today. We actually are in production. We've been in production for the past 5 years, and what we've seen since we started is a dramatic change in the quality, size, and value of the diamonds which we recover compared to what we saw when we first acquired the project back in 2009, 2010. So when we look at our mine where it is 100% owned, it is in Botswana. For those of you who don't know where Botswana is, amazingly, people don't realize this, it has a lower political risk rating than Canada. So if we were looking to be in any country in Africa, Botswana is definitely that country. It's based in Southern Africa, which doesn't mean it's part of South Africa, but a very, very stable democracy, and we're very happy to be there. They have a very progressive government, and we work very well with them. But when we look at the asset itself, what we've found as we've mined more material from the centre and the south lobe, those constituting about 95% of what we mine between now and the end of 2026, is a very strong population of large type 2A stones and the rarer type 1AB stones. And that's really what drives the value. It's not the quality of the diamonds that is the only thing, it's also the size of those diamonds. So just to put it into context, we mine about 350,000 carats a year. So since we started production, we're now just shy of the 2 million carat mark. To compare that to Canada, from when Canada started mining diamonds at the turn of the century, Canada's produced about 200 million carats. So we're sitting at about 1% of that. Out of those 200 million carats, there's been one stone recovered over 100 carats. In the last 4 years, Lucara has recovered in excess of, including the one yesterday, 148 stones larger than a carat. That's not just 100, it's plus 200s, it's plus 300s, it's the 800 carat Constellation stone. Constellation seems to be a theme within the group, which actually holds a world record for the highest value rough stone ever sold at $63.1 million. That's all about 2 or 3 times the market cap of a number of the companies out there. And it's those stones which actually drives the value, which has enabled us to do what we've achieved over the past 4 years. Oh, we don't have to go through that. And when we look at, so when we started off mining, we started off in the north lobe, which was the lower grade. And as we've mined more material from the center and the south, we've seen a continuous increase in the average dollar per carat of the diamonds which we sell. Now, if you were at the presentation or the lunch presentation yesterday or the panel, you would have heard that diamond prices have actually seen a steady decline, 5 to 8% last year. But because of the quality of diamonds which we have and the size distribution of those diamonds, we continue to see huge demand for our diamonds, which is really resulting in a very, very good supply-demand fundamental purely for the production which we actually produce. It's always difficult to do a presentation at this time of the year. Year-end results are not out. So I encourage people on the 20th of February, go and have a look at our average dollar per carat. We only had one exceptional stone tender in 2017, and a lot of people rely on those. But have a look at the number, which is testament to the quality of the diamonds which we have. But I think more importantly, it's what have we done with that money? And I would go out marketing, this was around about the end of 2014, and people would say to me, so how are you going to waste your money? And I think the common theme in many diamond companies, when you have a lot of money, you look for projects which are not value accretive. And the way we actually handled it was we started paying a dividend. So from when we paid our first dividend in mid-year 2014, we've now paid out in excess of $210 million in dividends. It's most probably about 25 to 30% of our current market cap. And we can do that not just because we have the regular dividend, but because we have the special dividend which we've added on. When we've had trigger events like the sale of the Lesedi, etc., that's where we've been able to capitalize on paying money back. And I think that is a key draw card for any investor. And what I'm going to talk about in the underground development is the reason why you want to hold the stock for longer, because we could be paying that dividend for 20 years to come. So in November last year, we put out the preliminary economic assessment. It talks about how we can actually continue to extract value from the mine at Karowe. And what this talks about is the extension of the resource. The pink that you see up there is the indicated resource down to 400 meters. The underground mine is designed to go down to 600 meters. So fairly soon we'll have an updated resource statement out which takes that pink, extends it down to the 600. But the beauty of it is that we know that the kimberlite is open at depth. We're very lucky that De Beers set a world record drilling a 24-inch diameter hole to a depth of 758 meters, and the kimberlite still goes on. So not only do we have the opportunity to extend the life of mine by another 10 years post-2026, but there's life after that as well. So when we look at the underground study, it's standard basic design which we've used. The guys are actually mobilizing drills as we speak to do the geotechnical and hydrogeological drilling to manage the risks of what we expect when we get underground. So we're actually spending $30 million this year to prove up the concept, and we'll complete a pre-feasibility level study, most probably around about the middle of the year, early in Q3. And a lot of that will be based on the updated drilling information which we're getting. So we have used standard design as we've actually gone through the underground development. It's based on industry standards. So the distance between the green tunnels, which you see there, the rim tunnels, standard 25 meters. But as we're getting more and more information about the sub-level caving, the geotechnical conditions, etc., we believe that there's a lot that Lucara can do, which is what has actually done very well for us in the past. And that's not controlling the value of our diamonds. We have no control over whether you recover a 100-carat stone, whether it's a decent quality stone, or it's not fit to actually be sold. And trust me, we get a lot of stones which are really, really ugly. But it's the costs to actually recover those stones where we have a very large amount of control. And especially when you look at a sub-level cave operation, instead of going block cave would most probably cost us between $300 and $400 million. It's a fairly big ticket to write. But with a sub-level cave, you can actually take those capital costs and move them into operating. And that's where we can actually control it. So some of the geotech information we've got now says that we could extend the distance between those rim tunnels to up to 30, maybe even 35 meters. That automatically sees a 10, 15, maybe even a 20% drop in the overall operating cost. Again, what Lucara does very well in maximizing the margin. And that's really where we're going to be focusing our effort as far as the pre-feasibility level study is complete. One of the key things I'd like to point out is Botswana is a very progressive company. They really know how to treat the mining companies. And even though they have a variable tax rate, which well, obviously, it'll be very expensive for us as we stand now, especially with the margins which we generate on the mine. They do allow us to expense all the capital expenditure in the year that you actually spend it. So as we do the underground development, cost around about $200 million, we get to offset that against the taxes which we're paying from our current developing mine. And over the life of the development, we get a net reduction in taxes of in excess of $230 million. And it shows how the government in Botswana is actually encouraging us to do the underground development because there's long-term value for them as well. I'm sure they would rather get taxes for 20 plus years versus cutting it off after 10 years. So it's a lot of those aspects which we continue to sort of work with the government on in terms of advancing the overall project. We're not going to go into the metrics, but again, if you look at the graph, that big orange curve which says $1.22 billion, that's where our focus is. It's how can we actually manage that, and that's where we feel we have the best bang for our buck in terms of improving the economics, which are all already exceptionally good when we look at the extension of the underground at Karowe. So as I mentioned, they already have the drills on site. We're managing the risks, hydrogeological, geotech. There are two sort of softer area zones where we can mine through. Oddly enough, not as bad as what they're currently doing with the development of the underground at Fruta del Norte. So the beauty of being within the Lundin Group is we get to leverage a lot of the value that others have in terms of work that they've already done. And it's been able to combine all of those sort of, I guess, common thoughts, the experience, etc. as a group, which adds a lot of value to everything that both Wojtek, myself, and all the other companies are doing. Hey, notes. So I'd like to thank you. If there are any questions, Wojtek and I will take. Do you want 2 minutes on Philo? Quick rundown.
I think we're probably good.
Okay. So we were very pressed for time, so we did go fairly quickly, but are there any questions before we close out the session?